Brisbane property market is going to be a solid investment in 2025. As per CoreLogic, from 1992 to 2002, Brisbane dwelling values increased by 340% over that 30-year period. Brisbane is a really good long-term consistent performer. Houses in Brisbane over that 30-year period actually grew by 389%. The unit market grew by that 170%. KPMG predicts that Brisbane property prices could increase 280 to 320,000 by the end of 2006, start of 2027. In 2022, there's economists that have predicted that the Brisbane property prices would increase and double by the 2032 Olympics. When you're looking at that long-term data, it gives you a lot of confidence. Welcome back to another episode of the Tailored Property Wealth Podcast. My name is Casey Taylor. I'm the host of the podcast. And in today's episode, we're going to be talking about the Brisbane property market and why we still believe that the Brisbane property market is going to be a solid investment in 2025. And we're going to go through just a lot of the different metrics, some data, just to really break down why Brisbane is still a really solid area to invest in. I've managed to build a multi-million-dollar property portfolio in just a few short years, and I want to inspire and motivate other Australians that if I can do it, so can you. The Tailored Property Wealth Podcast has been created to help educate, mentor, coach, and support you through everything relating to property investing to make sure you go out there and make a much better educated decision when investing in property. Please like, share, subscribe, and share this podcast with anyone who you think might see value in it. So let's get into it. Now, we obviously last episode spoke about the Melbourne property market. So if you haven't watched that one, go back and check that one out because we it's the same thing. We just go in, we break down a lot of that data for Melbourne as well. Alrighty, so Brisbane is a really good long-term consistent performer. And it doesn't mean that every single year prices increase, right? If we're holding property for a 10, 15-year period, there's going to be stagnations, there's going to be slight corrections, but when you look at even just like decade figures, there's still really good growth, just chipping away. Alrighty, so as per CoreLogic, and we might attach this article in the show notes because you can go through and have a look at this. It's a really good article that CoreLogic released in 2022, and it's going back through data over the last 30 years. Now, as per CoreLogic, from 1992 to 2002, Brisbane dwelling values increased by 340% over that 30-year period. Brisbane increased 74% between 2002 and 2012. Brisbane increased 49% between 1992 and 2002. And then over the last decade, Brisbane has increased 71%. And that's obviously through to 2022. So that's just some really solid data to showcase that long-term Brisbane's going to do well. There's going to be some decades where it's performing above, some decades where it's performing a little bit below, but have that peace of mind that it does continue to perform. And then if we're looking at those individual areas with that affordability piece, with stronger yields, there is going to be more value because that affordability piece I always talk about comes into play in understanding that some suburbs within the Brisbane area have performed a lot stronger than others, showcases that there's still a lot of room for growth in some of those marketplaces. So that's just a good one to look at. Now, houses in Brisbane over that 30-year period actually grew by 389%. So massive growth for those houses, and the unit market grew by that 170%. So that's why we focus on houses in metro locations because they outperform all other asset classes, which is an important one, which is also included within this data. All right, cool. So let's go through just some of the different bits and pieces that are going to continue to positively impact the Brisbane property market. We'll go through just some live data on some suburbs as well to showcase the demand right now in those areas. So in 2022, there's economists that have predicted that the Brisbane property prices would increase and double by the 2032 Olympics, bringing the median value up to $1.4 million. So there's a lot of room to grow there based on that prediction. And again, no one's got a crystal ball. A lot of the economists get things wrong, but they're basing this on a lot of these different metrics that we're going to go through. Now, it's important to note as well, and this is kind of holistically nationwide based on interest rates. CBA analysts they've done an analysis that for every 1% decrease to the cash rate set by the RBA, property prices increase roughly 15%. So right now we're in an environment where rates are kind of at the peak and we're just waiting for them to come down. It's not a matter of if they're going to come down, it's a matter of when. There's a positive influence for once that starts to take place. And naturally, right, and I speak about this all the time, there's going to be a massive amount of the herd coming back into the marketplace, and that's going to put pressure on that price growth because there's going to be more people competing for the limited supply levels that we do have at the moment. So I'm just going to divert quickly to the median days on market in some of the suburbs that we're touching right now, investing in. And if the herd is going to come back and there's going to be more people investing once we see rates reduce, it showcases the importance because median days on market in a number of suburbs is now lower than what it was 12 months ago. And that's why some of the suburbs that we target have done 15 to 20% in the last 12 months. So median days on market for the first suburb obviously remains anonymous, but 2023 median days on market was 19 days for this suburb, and now 2024 it's dropped to 12. So now selling on average 1 week quicker than they were a year ago. Median days on market for the second suburb in 2023 was 20 days. Now it has dropped to 14 days, so dropping 6 days. Median days on market for the third suburb was 19 days in 2021 and has now dropped to 15 days. So only a 4% drop, but still a low base. So across those three suburbs, under 15 days on average it's taking for that property to sell. A lot of these areas, they sell in the first open home or they sell prior to that, right? So it's really showcasing that the demand is still there. The demand is higher than it was 12 months ago because people have just started to adjust to that higher rate environment. They adjust their spending. It's a normal level, the cash rate now on average long term. We were just lucky for a period of time that it was so low. And this week I was having a conversation with someone who wants to purchase a positive cash flow property right now. It's just that is trying to find a unicorn. It is not possible when we're looking at gross yields of 5 to 6% at best, and we have interest-only rates at 6.5%. So naturally right now, just the interest rate itself is higher than the gross yield that you're receiving, and then we've got all other expenses on top of that. So you just got to be realistic with the marketplace. What we were purchasing, let's call it 3 years ago, was positive cash flow, but price growth has happened. Capital growth outperformed rental income growth, which naturally means our gross yield drops, and then we've had interest rates increase. That will change over time. In 12 months' time, it's probably going to be a different story. It's still going to cost us money to hold, don't get me wrong, but it might not cost that $300 roughly a week to hold right now. It's going to improve, and then we're going to get that rental income growth if we're purchasing in those right areas. Thank you for listening to this episode of the Tailored Property Wealth Podcast. I hope you're learning lots and getting lots of value out of this episode. If you want to discuss the opportunity of working with us here at Tailored Property Wealth, jump across to the website www.tailoredpropertywealth.com.au. Complete the contact form. Let us know that you're listening to the Tailored Property Wealth Podcast, and let's reach out. Let's have a chat and see how we can help you execute on your property goals. All right, next one. So KPMG, who they do a lot of data and analytics, predicts that Brisbane property prices could increase 280 to 320,000 by the end of 2006, start of 2027. So at the end of 2024, it's 2 years worth of growth. So if it does do that holistically in the Brisbane marketplace, that's a hell of a lot of growth, and quite positive. They also estimate that it's going to, so the 2032 Brisbane Olympics will create an additional 120,000 new jobs. Now, that's just going to inject a massive amount of money into the economy, and we'll get to that in a little bit of time. But those people who are moving to Brisbane to build infrastructure and all the rest of it are going to need somewhere to live. They're going to have to rent somewhere. They're going to have to purchase somewhere. And so many people, they go to Brisbane and they love the city. And then that's where they stay. So it's just building on that population too. And some of these things, they don't single-handedly mean growth, but it's having a look at these holistically and understanding all the different metrics and mechanisms at work that are going to continue to push those prices higher. So while we're on the Olympics, Sydney between 1997 and 2003 increased 97%, and that was a large influence due to the Olympics. So the median value rose from 178K to 520K. So some pretty big growth there across that period of time. There's going to be a lot of eyes on Brisbane. It's going to bring a lot of attention. And like I said, everyone loves Brisbane. It's a beautiful city, and there is that demand there. There's going to be massive infrastructure that it's ongoing at the moment. If you've been to the Brisbane city, you'll see it. I go there once every couple of months, and there's always stuff going on, always improvements going on. So the investing in a lot of the roads, the rail, amenities, hospitals, schools, healthcare, all the rest of it. So naturally, that's just injecting that money back in, creating those 120,000 new jobs that's predicted, and that's going straight back into the economy as well. So KPMG also predict that the Games will deliver 8 billion social and economic benefits to the Queensland economy and 17.6 billion nationally. And the trade and tourism industry is expected to receive $4.6 billion to Queensland. So, like I said, it's just pushing all that money back into the economy, and a strong economy is going to positively influence property prices. Based on that last episode with Melbourne, what's let it down a little bit is some of the negative impacts in the economy. All right, so 75% of Australia's population and population growth is expected in Sydney, Melbourne, and Brisbane. So it's a positive for those three cities, and it's projected that by 2050, Brisbane population will be 32.8 million. And by 2100, it will be 42.9 million. So there's going to be more people fighting over the same amount of land if we're looking in those established areas. It's just going to continue to push scarcity, and that's why we love metro locations and those established areas in metro locations, because over time, as more people get to and live in a place, that land becomes more scarce and more scarce. It's powerful to understand that. Brisbane vacancy rate, as per SQM research, is sitting at 1%. As at October 2024, we would have touched on that in our monthly update. And so population growth, the ABS predicts that Brisbane will have 4.2 million people by 2050. Just want to touch on, those projections for the population growth, 32.8 million is for Australia holistically, and then 42.9 million holistically. Building approvals. So Brisbane building approvals are simply not keeping up with the demand. So that is the pressure cooker. We've got massive amounts of demand with supply not keeping up with that. And that's going to create that pressure cooker and push prices higher. If supply is outweighing demand, that's where we can see corrections, stagnations. That's what we're seeing in that Melbourne market at the moment versus Brisbane, where demand is higher than supply. That pushes growth. That just simple metric to understand with supply and demand is crucial when purchasing. And a lot of people just don't understand it. Interstate migration for Brisbane, as per the ABS, it's the number one state to receive interstate migration. Lots of people moving up there, getting out of Melbourne, that lockdown period, moving up north, warmer weather, all the rest of it. Another piece of infrastructure is the underground metro that's going to be built under the city. It's going to create more transport options, etc. Cool. And I guess just touching on some of the rate reduction stuff, we do have a couple of countries that have already reduced rates. So it's starting to get to that point where we're seeing rates reduce. So it is a matter of time. America, England, Canada, and New Zealand have already cut rates. Some of them cut a couple of times. So it will come. When we don't know, it's hard to say, I imagine. Yeah, I'm hoping it's February. I've said this before as someone who's holding a fair bit of debt. Obviously, any rate reduction is going to be awesome, but it'll happen when it happens. It's not going to stop me from going out there and purchasing more property in the meantime. And look, if they take a little bit longer than February, the mindset I have is that it's just that more opportunity to get in before the herd flood back. So that's something we're seeing with clients at the moment. A lot of clients are engaging, and we're starting that process now to just be ready on the front foot, ready to go in 2025, getting in before the herd. So yeah, that's pretty much it. Touching on the Brisbane market, I did do a episode of the Brisbane market a couple of months ago as well. Some of the data will be doubled up. Some of it might be a little bit different. So maybe go back, check that one out as well. But we're still seeing a lot of value in the Brisbane marketplace. When you're looking at that long-term data, it gives you a lot of confidence in that marketplace. And a lot of people want to find these hotspots in these regional locations where they're pumping at the moment. But when you look at the long-term data, it just doesn't stack up. We want that consistent long-term data, and that is powerful when you're building a portfolio and you want those assets to continue to perform long-term. That 1 to 2% additional capital growth over a 10, 15, 20-year period is hundreds of thousands of dollars. So if you can get that consistent growth, but you can also get at the start of that purchase in that short to medium term, that area prime for growth catapults you to get that second purchase with that equity you've created and then go again and again. It's super powerful. Anyway, that's it for the Brisbane property market. What we kind of predict for 2025, it's gonna keep pumping away. Probably, I expect it to probably do around 8 to 10% overall for that city. It has been pumping this year, but it'll probably conservatively come back a little bit That's the mindset. But if we can get 8 to 10%, we're doing pretty good. Anyway, thanks for listening, guys. Have a cracker day and see you on the next one. Bye. Thank you for listening to this episode of the podcast. If you don't already, make sure you follow us across all of our social platforms. That can be Instagram, YouTube, LinkedIn, Facebook. I wish you all the best out there on your property investing journey, and I hope each decision you make in purchasing more property gets you closer to your goal of financial freedom.